All right, good day, guys. Yeah, welcome to day four, where we're gonna be focusing on marking up your charts correctly. And I see most people they struggling with that, and also they comparing how I show them with what Sai is also showing them. It's two different ways. Ne? I'm showing you on a beginner level, you know. So Sai is showing you from an expert level. He can explain it, sure, but a lot of people don't get it still, and they don't understand why he marked off those levels. You understand? So I want to show you how to actually draw your highs and your lows, your structure points, and when to update your markings. Is very, very important because it's something that we did speak about on day two when somebody even said, "What about the chart making two indications?" Right. So you have to know when to update your markings, and then common mistakes traders do when making their charts, and then also I'll do some demonstration. The goal of today is to help you develop a clean and consistent ICC charting behavior habits, right? Without too many things happening. So I can start. I can start however, right? I can start however. Let me just start with these. I'll show you these. We have a downtrend here, right? We have an uptrend here, right? So these two are totally different. So these would usually, just like I said the other on day two, these will usually happen on H1 and H4, right? You would usually find the trend that you're looking for on H1 or H4, right? So your swing points would be your highs and your lows would be these areas that you have here, right? So this would be, for instance, this would be your lower low, right? This would be your lower high, right? So because this is a downtrend, we usually have lower lows and lower highs, right? So it is known for lower lows and lower highs as chart goes down, right? Now, with the uptrend, you're gonna have these happening. Gonna have higher highs and higher lows, right? So you're gonna have these when it comes to an uptrend. When it comes to an uptrend, you're gonna have that, and when it comes to a downtrend, you're gonna have that, right? So these are lower lows and lower highs, lower lows and lower highs, right? Then you have a higher high, higher low, higher high, higher low, just like that, right? So when it comes to marking up your charts correctly, I did say uh drawing your highs and lows and structure points, right? So now these are your highs and lows, right? These are your highs and lows. So where do you mark off your chart in this case, right? So let's say in a downtrend, you are definitely maybe like the chart went up, right? It's kind of going up, right? You only have this lower low, this lower low, and this lower high, right? So because it's a downtrend, you expect it to make a higher low somewhere here, so it doesn't break this lows too, so you can continue with making the lows, right? So your best thing to do is to mark off this low, just like this. You must include the wicks. Please include the wicks because this is on a higher time frame, 4 hour and 1 hour. And when you go to smaller time frames, you'll find that price did play around that area. So here you'll find the wicks on these time frames, right? So you mark off this area because this area is where the indication came off out of. The indication came off out of that area, right? This was the in this movie was the indication that price is willing to go to sell to the downside below this lower low that is here, right? And price created a higher lower high. So price is willing to sell below this lower low. It gave you an indication, right? So then price decided to correct back into the lower lows, and then with that correction being done, it then decided to go out, and then we have another lower high here, right? So this was also a lower low, but it was an indication. And then we had the correction, like I said, this was the correction. We had the correction happening, right? Now, you will be looking to sell price whenever it gets to this level, right? But then when you go to smaller time frame, I will focus on this, guys. When- so when you go to lower time frames, you'll find out that okay, on lower time frame, whenever we are at this point, we had the indication to the downside, which is was this low. Price started building up that uptrend to the upside to create this lower high, which was the correction, right? And then probably maybe price did consolidate some areas, right? Before it started to start moving to the downside, right? Before it gave you the continuation to the downside so that it can go create the other lower low, right, to the downside. So now with this structure here, you want to focus on is the same thing. You want to focus on having in correlation with the overall movement, because the overall structure on a 4 hour 1 minute is giving you lower lows and lower highs. You want to have the same thing happening on a smaller time frame, whether this is going to be on a 15 minute or on a 5 minute, right? This can happen on a 15 minute chart or on a 5 minute chart. This would be the correction that is currently happening. This would be that correction movement that was happening, right? Now the continuation started to happen, right? Because now this was an uptrend going up to price to correct to the upside. You're gonna have those higher highs and higher lows to the upside, right? But once it start to give you those lower lows and lower highs, that is then being in correlation with the overall time frame. So how do you mark off this level? You look for where price has been bouncing off. I did an example here where I showed you that okay, price did consolidate in some areas, right? So you look at okay, I see that around this area price did consolidate. So I'm looking for a break below that area so price can be able to retest that area, and then probably I might be looking to take a trade even from here, right? I might be even looking to take a trade from here because why? You know that that indication that you that the indication that you had was here, the indication. So price, once it started to come back down, you were somewhere around this level. So now you immediately took that trade because of now price is in correlation with the overall trend. So it's giving you those lower lows and lower highs. You have a lower low here, you have a higher low, you have a lower high, you have a lower low, price gave you a lower high. So on this lower low, you can basically sell price to the downside. You can even sell it down to this, where the indication ended, or you can even sell it even further down, right? So some people are confused, but also there's an entry from this area here, because if price is willing to break below, so you can continue with the continuation and reach at this level, you can be able to get a move out of this. Because now price is giving you lower lows and lower highs. You can even be able to sell at this area. Same, with even when price was doing something like this on a maybe bigger time frame, it's only coming to retest, or is only coming to correct, on top of the previous lower lows, but it's not coming to correct on into the lower lows. It's just on top of the lower lows. So it will be, let's say it here, we had it correcting back into the lower lows, but here it didn't correct back into the lower lows. Instead, it corrected just about, it just came to touch here and then started to move to the downside. This is still a downtrend, and this was still an indication. This was still a correction. So you can be willing to take those trades from here, or even when it breaks this level here, because now that level, once it can break below that level, and then go incorrect, and then you quickly be able to take the trade. You can be able to take the trade. Same thing that happened with the KJJPY trade that we took yesterday. So you can know when to how to mark these charts. Obviously, the chart will never give you the same thing all over and all over and all over again. No, then trading would be very easy for everyone. So that's not the case, right? So same thing with an uptrend. Price would definitely, probably correct back into this or just above it. So you might be looking to take those opportunities because during the correction, the same thing happened where you had a movement where price came, give a high, give a higher low, and then give an indication, start to correct back. So it will be something like this, where the indication came also, and price started to correct back with lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, consolidate, lower lows, lower highs, higher lows, and higher highs, lower lows, higher highs, higher lows, higher highs. So it's more or less the same thing also here. So now the area that we're focusing on is this area on the correction to the continuation, right? So now you have this happening: lower lows, lower highs, lower lows, lower highs, price probably consolidating, and then starting to give you those higher highs and higher lows, right? So you also gonna be looking to on a smaller time frame. Remember, also this would be happening on a 15-minute or a 5-minute time frame. Remember, you're gonna be looking to have those where price have been probably been bouncing off of, right? Those areas where price was bouncing off. So you can mark off those prices and say, okay, I'm looking to see a clean break above, because also on a small time frame, because I did tell you guys the other day that there's also ICC happening on small time frame. If you're a scalper, you will be able to see it. But that one we will cover most of it into in the Hustle University. But I will also do some series behind that one also. So price has been showing you that okay, on smaller time frame, below this level where price has been consolidating underneath, prices can continue to sell. So as much as price can also be, it is currently correcting, it can also continue to go even down further. It can, once it comes to touch this area, it can even continue to go down, because we don't know how far the continuation is willing to go. So you want to see a change in direction. You want to see a change in the trend. You want to see get that change in trend. So how do we get a change in trend? It needs to correlate with a bigger time frame and be above a level where now we know above this consolidation we're willing to buy price. You understand? Because price has been consolidated under this level of on 15 minutes or 5 minute candles where we've been having those consolidation. You want to have that clean break above, which will give you a higher high, and then a clean break above which will give you a higher high on 15 minute, come and give you a higher low. Here's your entry point with our entry model. There you have your entry point to the upside. You have your entry stop loss the just underneath the higher low which was given to you, and then voila, there you go. You see? So it's pretty much how you can be able to get into it, how to mark up your charts. So with this in mind, I will now be able to take you to the live charts. So these are the kind of things that are willing to happen. So remember, that uptrend on a bigger time frame, that's the trend. Now you have the trend. Now you scale down to 15 minutes and 5 minutes. You look for levels where price has been bouncing off. You look for those levels. You understand? So you need to understand also where you are, because now once you find the trend, it's much easier to understand whether you are in an indication or you are in the correction or you are in the continuation. So when you are in an indication, don't take too many trades. Just wait for it probably to correct back. And if you are in a continuation, it is much easier for you to be able to take trades, because you are in a continuation. You just looking for levels where price did bounce off of, and then you can buy off of those levels. So because you can be able to you have data based on the correction that happened and some parts of the consolidation that were happening. You understand? So it's more or less the same thing, and also the same thing with uptrend, where you can have price giving you higher highs, higher lows, higher highs, higher lows, higher highs, and not really coming to retest, I mean, correct back into the lows just on top of that. And I've been seeing a lot of these happening on gold recently. Price just coming to, price just coming to correct on top of the, the high highs and push into the upside. So people will look for it to come down or whatever, but it didn't do that. Just comes and touch it and move to the upside. So it sometimes it doesn't even touch. It just maybe like 3 5 points away from touching that higher low, and then I mean that higher high, and then crease that higher low, and then start to move to the upside. Same thing that happened with gold today when the market opened, right? It's short to the downside, just I think it was about yeah, p- about 5 to something, yeah, points away, and then it started to create that higher low, and then started to move to the upside. So that's pretty much, but it already gave you a structure. So those you can act based off the structure that was there. So this is price action and market structure. ICC is just terminology to help you with this 1 2 3 step. The 1 2 3 step, which is indication, correction, and continuation, which is a breakout, retest, and then continuation. It's just the same thing. It's price action and market structure. So you don't need to think that ICC is ICC is this big strategy that is, I don't know, but it is just market structure. It's pure price action. That's what you need to know. You need to know your trends. And am I in an uptrend? And if I'm in an uptrend, what am I looking for? I'm looking for higher highs. I'm looking for higher lows on a bigger time frame. If I don't have a proper trend on the 4 hour, let me go down to 1 hour. If I don't have a proper one on 1 hour, let me just go down to 30 minutes, see what I can get on 30 minutes. If you start to see a structure in 30 minutes, start marking all those lows. Go down to 15 and 5 minutes so you can be able to look where price has been bouncing off and start to take entries based on of that. And then use the entry model, because we can have that price going up and then price bouncing back, and then it going down as a fake out, because now you're already on the trade, because now price broke out, you traded the breakout. So as you can see, this is the same thing. It's the same thing. You have the indication, even the entry model that we have. You have a higher high, you have a higher low. The indication to the upside breaking the indication to the upside. Now we're breaking our higher high, giving us an indication. Price corrects back to give what? To give us a higher low, right? Price corrects back to give us a higher low, so you can continue. The reason we enter is this is the similar thing even with our entry style. Price gives you an indication, which is a break above level of resistance. Comes back to give you a higher low, continue to the upside. Our entry is there. So same thing here. That's what I'm saying. You can buy at the continuation once you've missed this move to the upside. But you know that we are in the continuation. Price has to go up to create another higher high. Since price is bullish, because price is giving me higher highs and higher lows. You know, price is giving me higher highs and higher lows. So those are the kind of things you look for. Price is giving me higher highs and higher lows. You need to see these happening. Higher highs and higher lows, higher highs and higher lows. And then you have price also coming to retest that level. You can also enter based off that and again push to the upside, because that's what that is price action at its best. So, but the best way it would be to go to small time frames, so you can be able to take those trades. But it's the same thing: indication, correction, continuation, breakout, retest, continuation. Right. So I'm just gonna give you guys before I give you guys an example. Does anyone have a question? Probably I can answer it quickly. Does anyone have a question, guys? All right. Let me just move on. Okay. Um, and we're gonna start our top-down analysis in terms of how to mark off our charts. As you can see on gold, we don't have much structure happening. We have this on a 4 hour. Price gave us a higher high, price gave us a higher low on a 4 hour, right? we can, all right, all right, no, okay. We can see that price give us a higher high. We include the wicks, and then price give us a higher low. We include the wicks, right? So this is what we have on 1 hour, right? Then I'm on a 4 hour, sorry. Then we go to for 1 hour. Like, okay, on 1 hour, what do we have? We had price giving us a higher high also here, giving us a higher low, and then continue to give us a higher high, and then give us a higher lower low at this. So price broke below this level, this higher low that was here, right? Price broke below that higher low that was here. So it came to give us a lower low. So now this move also to the downside on a 1 hour can be classified as an indication. This move was an indication, right? So on a 1 hour, based on a 1 hour. So you want to look for price to go correct to the upside before you can start to the back to the downside. But you will know that okay, based on what 1 hour has shown me, because of price gave you a high high, higher low, higher high, and lower low, and then continue to go up to the upside, gave me a lower high, higher low, lower high, a higher high, higher low, and then continue to the upside. All right. No, I will definitely mark up another pair. I will go to KJPY or GBP USD. So I'm just trying to show you guys because most of you guys want to focus on volatile pairs, but ICC works everywhere, right? So remember, this is a on 4 hour. So I'm just gonna move this to the weeks, just so we can cover the weeks. Uh, Definitely, that's what I'm doing. All right, so as you can see, now you had this happening. So I'm just gonna move this to cover the weeks because we are on a 1 hour, right? So now on a 1 hour, this is what we have, right? So price giving you those, like, this would be considered okay. Now you have this happening where price came and then broke below this higher low, right? Price broke below this higher low to give you this lower low, which was here, right? So let me just write it down. Higher low. Let me just say 1 hour higher low, right? And then 1 hour lower low, right? That was that, and then we did have this also, a higher high, and then also another higher high to the top side, right? And I've been seeing a lot of these happening, especially on gold, where price now is giving indication and then just continues. It doesn't correct, it just continues to the upside and then give another indication on the upside, right? So you have a higher high, you have a higher high, you have a higher low. Even if you were to switch on that indicator, it will probably show you the same thing. You see, higher high, higher high, lower low. You understand? But this was the lower high. Price came down, give you a higher low, higher high, higher low, But pretty much that's how it is, right? So now you want to go down probably to M30. You're like, okay, let me see more what's currently happening on M30. You see price has been bouncing off these areas, right? But you know that, okay, based on the indication that came from the upside, that we could have marked off these areas here because price also did react off that area. We know that okay, based on the indication that happened from this higher high to this higher high, anything above this level would be bullish. Anything above this level would be bullish. That means now between here this here would definitely be a no trading zone. You understand? Because now you had an indication to the downside. Price started to correct to the upside, but you know that there's that high on the upside, and on a 4 hour we are overall bullish on the 4 hour. On the 1 hour, we price has given indication giving us a lower low to the downside, showing that price can be bearish. But you know that above that level we are bullish. because we have that higher high. And as you can see, price did break above that level. And as you can see, price is pushing to the upside. It's going to push to the upside. But you could have taken a trade based on how you marked off your chart. So here was your waiting area. You didn't have to take any trade here because now price could have easily went to correct, broke below, retested, and started to give you another lower low. So now your entry to the sell side would have came here because price has shown you that below this area it is willing to sell. So you could have sold below this area until probably this lows or even lower. Look for the next swing low, which would have been this here, right? So that's how you would have said, okay, let me just wait it out. If price continues to be bullish to the upside, I might just be looking to take trades on the upside, right? So once you go, remember this here is a no trading zone, right? So I'm just gonna delete this so it doesn't confuse you guys. So once you go down to 15 minute, once you go down to 15 minute, as you can see, price gave you an indication, right? Price broke above or gave you an indication, as you can see. Okay, Lord, did someone say? All right. So I see people are confused. Yes, on the 4 hour, this higher low on the 4 hour, this lower low is a higher low on the 4 hour. But on the 1 hour, this is a lower low on the 1 hour because it broke this higher low that was created. So we have a lower low. Yeah. So this might have been an indication to the downside to sell. Price is willing to sell whenever it comes below here. So if price continues to correct to the upside, whenever price can come down below that area, you might be looking to sell because of this indication. But then, just like I've been telling you now, price above that also can be bullish because we have that higher high. Now you're on a 1 hour, right? So now, just like I'm telling you now, on the 15 minute, price broke above this, right? You needed a retest. Price broke above, gave you a higher high. And if you can switch this on, I think I didn't really switch, it didn't really mark it right. But price gave you a higher high above here, a level where you know that price gave me an indication the 1 hour to give me a higher high. So that means price above this level can be bullish, but you don't have to enter it because price can just fake you out. And then just like you see now, you have equal highs that are here. These are both equal highs, right? So now you mark off the top of this candlestick that broke above. You see now it broke and continued to the upside. You need a higher low before you can take a trade. So now you can mark off this top here and be like, okay, this is the top. I need price to give me a higher low. So price the third candlestick came down, as you can see, it gave you a higher low. So this is the higher low that you have, right? So now price can then go up because price broke above, gave you that higher high, and then came to give you this higher low. And then if it continues to go to the upside, your entry would be based off that, and then your stop loss would just be below this. And as you can see, the stop losses of gold has been crazy lately. It's been giving us crazy stop losses lately. So that's pretty much how it is. And it is the higher high came from this, price giving you some highs, higher low, higher high, higher low to the upside. And based on this 1 hour higher high that above this higher high or above this higher high where we got an indication price gave us an higher high before it continued to the downside to give us a lower low, we are bullish. So you don't really focus on one thing. So comes down to answer you guys on the double indication. It doesn't have to be a double indication. You just need to trade what price has shown you. Above this higher high, you can be willing to take a trade. But this can also be a fake out because price can as much as come back and then give you equal highs and then continue to go to the downside because now it already gave you an indication to the downside that it can sell to the downside. So probably this was just a correction which ended up being equal highs or equal tops, equal highs, whatever, you know, yeah, equal tops or equal highs, whatever you guys call it. So this is what price can do. It can just give you those equal highs at this level, which would show that there is sellers sitting at this area, at this level of resistance. If price continue to go to the downside, you would be only looking to sell here because that's where the indication came off. That's where the higher low was broken. So you will be looking to sell here. So you don't need to rush any trades within this level here. You don't need to rush any trades. Just wait for price to break below this, give you a higher low, then enter based off that. As you can see, price is now moving to the downside. As you can see, people who bought there are being taken out like nobody's business. So that's pretty much what's happening. I hope you guys understand. Um, I hope you guys understand. Does anybody maybe not understand anything? Do you have a question? So this is how you mark up your chart so it doesn't confuse you. If you're struggling, switch on that indicator, but use it just so it can help you. Don't use it on 15 minutes because it's gonna confuse you even worse. Even worse. Don't use it, just use it on 1 hour and 4 hours. On 1 hour and 4 hours. So you can understand those things. You see? These highs are closer to each other. As that's why I was saying yesterday, I sense some level of exhaustion between the highs because the higher highs on 1 hour they're getting closer to each other, but price continue to rally to the upside, and then price decided on market open to shoot, give us this lower low, and then continue to the upside. But then now it seems like price is giving us equal tops or down or equal highs, and then it's gonna come back to the downside. So that would mean if that is these are equal tops, that would mean this overall movement was the correction. So now you will be looking to sell below where the higher low was broken, where the indication to the downside came from. I hope you guys have a nice day. We only left for like 3 minutes on the meeting, so I don't see anybody posing any questions. So yeah, that's pretty much. I hope you watch this video because guys, you need to be on the university. You need to be there. That's where we're gonna break down these things. You need to learn price action because, like I'm telling you now, yeah, like I'm telling you now. ICC is price action. Is price action market structure. There's no any other strategy that you'll go through that does not have price action. It's just price action. Some things they just complicate it by saying this and that, this and that, but it's overall price action. So Sai just gave you a three-step process where he said you have an indication, price breaking, breakout, a breakout, a retest, a continuation. you know, a breakout, a retest, a continuation. It's a three-step process. He just made the word ICC. Indication is indicating, it's giving you an indicating, it's giving you an indication that I'm willing to buy above this highs. It then corrects price. It needs to come correct price. It will always come correct price. Even when you look on the daily, I will show you something. Even when you look on the daily, price will always come in correct, no matter how long it takes. Price will always come in correct. You see these bullish momentum. The day price goes starts to drop, people will cry because price needs to come and correct everything that is happening has happened here. It needs to come and correct it also on a daily. It needs to come and correct everything because when you look back when I started trading, price was somewhere here. When was this? No, this was not here. I started trading 2018. So price will always correct, guys. Price will always correct. Let me just switch this thing off. Price will always correct. You see? As much as it can go up, go down, go up, go down, it will always one way or the other correct. You see? It went up, came down, consolidated, went up, came down. Exactly. But obviously for political reasons, Those are the ones that have been pushing the market. But yeah, so I started trading around here. Yeah, when price was here. Yeah, somewhere here. That's when I started trading gold. Text me. I'll give you guys the my Telegram handle, so you guys can text me on that. And guys, please, the university is not a signals group. I'm not gonna be giving signals on university. We're gonna be waking up in the morning or before New York session. We're gonna be doing some market analysis. Taking you through my thought process and also what you're thinking, all these kind of things to help you build that confidence in the market. Help you see what I see. So you can see it much better because and also try to document what you see so that it can become much easier for you. You understand? So there's not gonna be a signals group. We're gonna be a community where I'm gonna be there. We're gonna have those one-on-one sessions, doing on a personalized level where whatever you're struggling with, I will help you personally. So we can schedule like 2 to 3 sessions per person a week. But obviously I will balance my time based on how you got the availabilities of you guys. Some of you are no work, so while you at home, whatever time you're very comfortable with, I can make time, and then we have that 1 hour, 30 minute, 1 hour session addressing that, seeing that, obviously some homework here and there, so you can come back and also see like, oh man, see, I've tried this, it worked, all of that kind of thing. So it's to help you through that process. It will help you. You understand? So yeah, pretty much, guys. Pretty much. So thank you for attending, guys. Yeah, I hope you go watch this session against us, so you can also see the overall, thing in terms of how to mark off your charts and when to enter and when to wait for entries. Right. Thank you, brother. All right. Enjoy your day, guys. Bye bye.